Welcome back to Alpha Recap, your after-hours market rundown from stockalpha.ai. We're unpacking today's action, and as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. We've got a lot to cover. Big divergence across sectors, megacap tech strength, and some clear winners in energy and real estate.
So, what really stands out here is the market closed with a pretty clear split. The S&P 500 finished up about 0.2%, the Nasdaq 100 finished the day up about 1.2%, and the Russell 2000 ended down roughly 0.4%.
I mean, when you step back and look at this, that kind of dispersion tells you this was a rotation day, not a broad rally. A handful of sectors and the biggest names did the heavy lifting.
Exactly. The headline narrative was megacap leadership in tech alongside renewed strength in energy, materials, and real estate, while small caps and industrials lagged. Flows were concentrated, so breadth stayed narrow.
Right. And the other thing is, the drivers weren't just sentiment. We had supply headlines for oil, real estate deal activity, and program flows into major tech names all at once.
On the energy front, supply concerns pushed oil-related names higher. That helped commodity-linked stocks and supported headline earnings expectations for energy firms. But it also nudged up near-term inflation worries.
Honestly, I was a bit surprised by this one. Real estate also showed life. A bunch of financing and M&A updates lifted parts of the REIT complex and pulled yield-seeking flows into that sector.
And then there was the megacap story. Institutional activity and program trades clustered in the biggest tech names. Analysts pegged the gross notional around about $16 billion, which helped the Nasdaq 100 outperform even though many mid- and small-cap tech names stayed under pressure.
Wow. That level of flow is the kind of liquidity that can move an index even when underlying breadth is weak. Options volume and program trades around those names suggested institutions were repositioning.
Small caps and industrials felt the opposite pressure. Signs of softer manufacturing activity and subdued domestic demand hit the Russell, and heavy industrial names gave back some recent gains. Let's walk through the sector map so listeners can see where money moved. Energy was the clearest winner. Integrated oil and gas names, certain explorers, and even some energy services rallied on the supply narrative.
Materials and mining picked up too. Project activity and higher commodity expectations helped miners and materials suppliers. Real estate outperformance came from deal and financing headlines in select REITs.
Utilities were mixed. Some storage-related names, think energy storage and regulated utility storage solutions, did well, while others tied to coal restarts saw choppy trading as transition stories got recalibrated.
Communications and media had pockets of strength on content and distribution news, and the cannabis complex continued to bounce around on policy and retail demand headlines.
Industrials were broadly under pressure. Heavy manufacturing and global trade exposure looked weak as activity indicators signaled softer demand and inventory adjustments. Financials were mixed based on credit, commercial pipelines, and mortgage exposures.
Yeah, that tracks.
Let's translate that into Fed thinking. There weren't any major macro surprises today, but the energy-led uptick matters. Higher energy costs can push headline inflation up in the near term, and that could keep the Fed's bar for easing higher than some market participants expected.
I mean, when you step back and look at this, higher energy acts like a tax on consumers, which can weigh on cyclicals and small caps, even as energy stocks rally. Analysts note the Fed remains data-dependent, especially on CPI and payrolls.
Right. If commodity-driven inflation stays elevated, markets might push out expectations for rate cuts, and that would show up in fixed income positioning and curve moves. Traders are watching incoming CPI, PCE, and employment data closely.
Quick reactions. Big move.
On individual names, major tech companies, think NVIDIA, Apple, Google, Amazon, and Microsoft, were lifted by those institutional flows and program trades. Energy big names like Exxon, Chevron, and BP showed broad strength too. Select high-yield REITs rallied on deal news, while industrial names such as Boeing, Caterpillar, and General Electric lagged.
Crypto-adjacent equities saw uneven trading after disclosures tied to staking and ETF filings. That group stayed volatile as structural and regulatory questions remain.
Technicals and breadth were the other headline. Leadership concentrated in megacaps left overall breadth unimpressive. Historically, rallies led by a handful of names without broader participation can be fragile.
Options players showed that too. Increased notional around megacaps and energy suggested hedging and directional bets were active. That raises cross-sectional volatility, even if headline indexes moved modestly.
So, what should listeners watch going into the next session? First, inflation and payroll signals. Any upside surprise could recalibrate Fed expectations. Second, keep an eye on earnings and deal flow, especially in real estate and materials.
Third, leadership sustainability. Will megacap tech hold gains, and will the rally broaden beyond a handful of names? Fourth, whether the energy supply story persists. That could keep commodity-sensitive sectors ahead of the pack.
And fifth, market breadth and volume. We'd like to see small cap participation rise to validate a healthier risk-on move. If breadth deteriorates further, analysts note the current move may be rotation-driven and vulnerable to a reversal.
Short reaction? Right.
Bottom line, today was a rotation day. The Nasdaq 100 outperformed as megacap flows lifted tech, energy rallied on supply-driven headlines, and real estate saw pockets of strength from deal activity. Small caps and industrials lagged, leaving the tape mixed.
Final thought. Momentum favored larger, more liquid names and sectors with idiosyncratic narratives. That's informational only. Analysts note this is market observation, not a recommendation.
If you're tuning your watch list, keep an eye on inflation data, payrolls, any more real estate deals, and whether breadth starts to pick up. And honestly, I was a bit surprised by how concentrated flows were today.
So what really stands out here is watching whether those flows broaden will tell us if this is the start of a wider advance or just a rotation.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.